CoreWeave stock just crashed more than 11% in a single day. Is this the perfect buying opportunity? Or is there even more downside ahead? Today, we'll break down the chart, identify the key support and resistance levels, review the company's fundamentals, discuss the latest news, and see why Wall Street. Analysts believe this stock could have nearly 92% upside. Let's get started. Looking at the daily chart, CoreWeave is trading around $72, right inside a major demand zone. This area has acted as support before, making it one of the most important levels to watch. If buyers successfully defend this level, the stock could bounce toward the first resistance between $80 and $83. Above that, the next major resistance sits around $95 to $100. If momentum continues, the stock could eventually challenge the $115 to $120 supply zone. However, if CoreWeave breaks below $70, the next support is around $66 to $68. If selling pressure continues, the stock could even test the long-term support near $60. For investors, the $70 level is the key line in the sand. Now let's talk about the business. CoreWeave has become one of the fastest-growing AI cloud infrastructure companies. The company rents high-performance NVIDIA GPUs to AI developers, enterprises, and large technology companies. Demand for AI computing continues to grow rapidly, which is why investors became so excited about CoreWeave. Revenue growth has been impressive. However, the company is still losing money. Its latest financials show negative earnings per share, more than $1 billion in annual net losses, heavy spending on new data centers and AI infrastructure. Building AI infrastructure requires enormous capital, so profitability could still take time. So why did the stock fall so sharply? The recent decline appears to be driven by several factors. First, AI infrastructure stocks have been under pressure across the market. Second, investors remain concerned about CoreWeave's debt levels and continued capital spending. Finally, after the stock's huge rally earlier this year, many traders are simply taking profits. The long-term AI story hasn't necessarily changed, but market sentiment has become much more cautious. Despite the recent sell-off, Wall Street analysts remain surprisingly optimistic. According to analyst estimates, average price target $138, highest price target $302, lowest price target $36. The average target represents roughly 92% upside from the current share price. Remember, analyst price targets are opinions, not guarantees. So what's the strategy? If you're bullish on AI and believe CoreWeave will continue growing, buying near strong support could offer an attractive risk-to-reward opportunity. Because this is a highly volatile stock, many investors prefer building a position gradually, instead of investing all at once. If the stock holds above $70, a recovery toward $80, $95, and eventually $100 plus becomes much more likely. However, if support fails, investors should be prepared for a move toward $66 or even $60. CoreWeave remains one of the most exciting AI infrastructure companies, but it's also one of the riskiest. The company has tremendous growth potential, yet it still faces challenges such as profitability, debt, and market volatility. The $70 support level will likely determine the stock's next major move. Now I'd like to hear from you. Do you think CoreWeave is a buy at these levels? Or do you expect the stock to fall even further? Leave your thoughts in the comments below. If you enjoyed this analysis, don't forget to like, subscribe, and turn on notifications for more stock market insights. Thanks for watching, and I'll see you in the next video.